welcome back. Hey, a fascinating day. So much has happened. Go to my Twitter. I just posted a bunch of stuff today. Getting exciting. 2020 is not over yet. A lot happened today. We could cover some events that have happened today, then I'll go into the charts, do a little update. There was a cyber attack or something on the markets, and a lot of the companies, there's more to that. I'm not going to talk about it. Just so much. The jabs coming out. I wonder how you MAGA people feel about that. just gonna support it, aren't you? Good luck with that. As long as it's not mandatory. But the thing is, companies are gonna make it, mandatory. So, maybe the orange guy is one of the guys said this and it was funny, and I was thinking this too. Maybe he's a hardcore Darwinism. Maybe he's into hardcore Darwinism. What else? There's so much going on. I'm not sure where to start. The Electoral College is voting today. Nevada already it's a tie, so it didn't go for anyone, I don't think. I'm not sure. Yeah, there was a massive outage, disruption. Stocks are jumping on the jab hopes. We'll see if it works out and everyone's okay who takes it. I still wouldn't. I mean, long-term effects, you don't know. Or maybe you get another one and they interact with each other later on. Or maybe it interacts with a new cold that comes around. What else is going on? By the way, go to my website. 40% off, limited time. I know it's the holiday season. But, it might pay for itself. Mining stocks are down across the board, and I still expect a little more downside. We have to wait for the market to correct, and that'll be your big life-changing wealth transfer buying opportunity for these mining stocks. You guys need to realize, like, this past summer and spring, whoever bought the mining stocks you outperformed everyone in the market. We did very, very well. Like, my entire portfolio went up like 20-fold. Some stocks went up 5x, some went up 60%, some went up 1x, some went up 10x. And if you want to experience that, you'd have to get ready now to buy the dip. And the next bull run in mining stocks is going to be huge. It doesn't matter who gets elected. It's just the printing presses are going to go on overdrive no matter what. Now, granted, it's not the orange guy, it's the other guy, the China guy. I mean, the dollar is going to probably crash in 2021. I don't know what to tell you guys. And again, everyone is bullish. The bears are hard to find. And my last video, I talked about how everything's overextended. There's another article we could look at. Everyone's just, it's euphoria. And it makes no sense. Maybe over the jab, but there's no reason to be euphoric. I mean, they're doing more lockdowns. I'm sure that's gonna put the final nail in the coffin for the economy. Like, no hopes of returning, at least for the major cities, for New York and Cali. and Illinois, right? Evictions, the forbearance for tenants to be evicted expires towards the end of this month. I'm sure they will renew it, but either way, I mean, the owners of the apartment complexes, the homes, I mean, they're if they don't get bailed out, then they're gonna lose the property, and then everyone's gonna leave anyways, right? Someone's gonna collect. Someone's got to collect. I mean, you can't just have no one paid. I'm sure the printing presses will turn on. They'll try to make everyone whole again. So in the end, we all suffer as a whole. That's socialism. And the price of everything's going to keep going up higher while jobs don't come back. We only lose them. Again, last week, Friday, another 800 million lost their jobs. It's like every week now. And again, there is a delay as the economy falls apart. There's a delay, like 6 to 8 months, but we're gonna start seeing the ramifications. I guarantee you by spring in 2021. Matter of fact, if they do lockdowns again, everything's gonna burn to the ground by midsummer. In my opinion, my guess. Uranium stocks, I put that out for the private group. There's some good buys, and it's gone up like 5x that one stock. So real yields, I'll talk about this, how it could be the catalyst for the next wave up rally in gold and silver. Yeah, I tweeted about this. I put this in my own newsroom on the chat group. Links below. Find it. So, I mean, the market, I don't know if the market's priced in the fact that we're probably not going to see any stimulus till like next year after the 20th. The Schiller index. By the way, today a lot of news came out, and the odds of the orange dude staying in power is going up still. And how's this going to affect the economy and the markets? Well, I don't see it any other way moving forward that these are my thoughts. We either have Biden, which would be accelerationist. That's, in my opinion, that will just accelerate the collapse of the empire, essentially. And you know what? A lot of the conservatives are going to become accelerationists, and that means we really don't have much time before society really unravels. I guarantee you by this time next year, you're going to be living in a different world. And if you thought the events of 2020 were bad during those riots, that's nothing. Just magnify that 100x across the nation. And it'll be just ongoing every day. And the markets will not be able to ignore that whatsoever. Neither will the public. The normal's not coming back, normies. That's all I have to say. The orange guy wins out. We're still going to see the same thing. I just think it'll get clamped down on. And it'll eventually stop because it'll be put to rest. Probably quickly. And it can be, right? But, you're still going to see crime and just slow decay. And on top of that, I mean, the US is definitely at war. It's just different. It's like fifth generational, but you're going to see other things happen, like power going out and this and that. And so the volatility is not going to go away. No way. Like, it's only going to accelerate no matter who wins or what happens. I just think we have a better chance and we have more time to prepare and whatnot if the current administration stays in power for ourselves. That's what I'm saying. But either way, it's whatever's coming, it's not going to be good. And then there's going to be weird stuff happening, like, I don't know, aliens are going to land or something. You're going to see some weird stuff happen in 2021. And I'll show the private members probably later this week. Like, I just have something that kind of can show you guys what might come. Read a little bit of this by Tyler Durden, authored by Lance Roberts, realinvestmentadvice.com. In a recent interview, Dr. Robert Shiller justified sky-high stock prices by using a measure called the earnings cap yield, or ECY. There has been much puzzlement that the world's stock markets haven't collapsed in the face of the COVID pandemic, especially in the United States, which has recently been setting record highs for new cases. But maybe it isn't such a puzzle. A measure we call the excess cap yield puts the long-term outlook of the world's stock markets in better perspective. I haven't read this. I don't know what this is. I don't know what the Shiller's cap yield thing is. All I know is the only reason markets are going higher is because they're printing endless, worthless money, and it's causing asset inflation. That's all it really is. Before we dig further into this analysis, it is essential to review what we have previously stated about valuations and discussed earlier in the Shiller's. Alright, the problem is that valuation models are not and were never meant to be market timing indicators. The vast majority of the analysis assume that if a measure of the valuation, PE ratio, and the rest of them reaches some specific level, it means that the market is about to crash, and two, the investor should be in 100% cash. Such is incorrect. Valuation measures are simply just that, a measure of the current valuation. More importantly, when valuations are excessive, it is a better measure of investor psychology and manifestation of the greater fool theory. Right, I agree with that. I mean, if fundamental analysis worked, it hasn't worked in decades, and that's mainly because of central banks and the manipulation of the markets. That's why fundamental analysis just does not matter. Currently, Tesla's worth more than like all the car companies, all the major car companies in the world, and they produce maybe like 1% compared to those car companies. So there's nothing makes sense. It's insanity world. But nobody cares. The only thing they look at is, when are they going to come out with more stimulus? Which, that in itself proves it's an asset bubble, and that's where all the inflation is, and it's a bubble, and what happens to all bubbles? They pop. And at this point, everyone on Wall Street should know that it's a bubble, but they're gambling, and I said this in my last video, they need to every quarter hit a target. They compete with one another, and they're basically just playing, musical chairs, and they all think they could sit down and they won't be the person without the chair. And that's not something's gonna happen, and it's gonna happen over the weekend, and all of a sudden the rug's gonna get pulled out from underneath them, or they're all gonna be standing there without a chair to sit on. That's what always happens. The case made a salient point. By taking rates to zero and providing excess liquidity has made the price earnings multiplied determined by a near zero risk-free rate of return. Yeah, whatever. I mean, I pretty much just explained what's happening. They just then they're talking about the psychology. Pretty much we are in the FOMO phase right now, if you're missing out, or the euphoria phase where literally retail investors and everyone is thinking, well, I don't want to miss out. This time it's really different. The central banks can keep this going higher and higher, blah, blah, blah. And we all know how that ends historically. Total debt versus GDP versus monetary velocity. Listen, the inflation's going to come when the equity market just finally tanks. All of that capital is going to rush out of equities. And where do you think it's going to rush? Well, people are going to go out and buy things. It's going to go into metals and mining stocks. And that's about it. And that's where the inflation is going to come from. All these Keynesians and Ivy League and all these smarty pants, they're like, look, there's no velocity in the money supply. There won't be inflation. And even the dollar milkshake theory thing, same with that. And it's because debts are coming due. Well, once debts start defaulting and the central bank can't let the stock market crash, because that's where all the tax revenue in the end is going to come from for the system. So they're going to just keep printing, and that's why it's guaranteed they're going to keep printing. And the printing process is just going to keep running until the end. And a lot of people, once they start realizing that inflation's really taken off, they're going to sell their equities. And then they're just going to go buy real things like land, homes, physical things, metals. And who's going to end up holding the equity bag? Dumb people and banks, central banks. And that's it. There's your Japanification. And once people realize, like, when they sell their stocks, their money's not worth as much, they're all going to sell. But a lot of them are going to go into metals, because metals is going to go into a bubble. Like 8,000 an ounce gold. I expect that at this point. I really expect that in the end. You get 8,000 gold an ounce, and let's say $300 or $150 an ounce silver. Your mining stocks right now are priced at $1,200 an ounce gold. Probably, I don't know, $18, $17 an ounce silver. So, you're going to do very well. Some people are like, what are the 10Xs, Laszlo? I'm like, dude, they all are. And you just have to wait it out and be patient. 10X is you're doing bad. I think in the end. 100X is, that's probably your average return for some of these mining stocks. And then, some of them are just going to do really, really well. Like, you're not going to believe it. This is like a once-a-lifetime type of opportunity. Also, it also depends, right, who gains power in the next few weeks. Because a lot of people are just not going to accept the other guy, and they're going to, like, stop, like, paying into the system. And things are really going to accelerate, like, really quickly, I think. And a lot of people are just going to take their retirement out of the markets. And I'm telling you, they think they're going to be able to control the system as it falls apart. They're not. They're not. So, what's going to happen to real estate? Again, I think it all depends where. Real estate in densely populated areas, big cities, and even the suburbs, even the surrounding nice parts of towns around the cities, I think the prices of them are just going to, like, fall because of the unrest. But land out in the middle of nowhere is probably going to skyrocket. And that's why I'm doing that thing that I'm doing, right? Which I do need more people to join. And if we don't get enough, then whatever. I mean, we do already have enough to get a decent amount of land. And then, our mining stocks will go up, and then we'll be able to get more. But we have to time this well. I'm thinking, I will see. So here's valuations versus interest rates. Interest rates are the orange. Cap valuations is the gray. You see it really peaked out in 1999, 2000, NASDAQ.com bubble. And that really was probably the peak for the US, like the good times. And I've said that for decades. Or since early 2000s. We're not gonna be able to outdo that because of the current because of this past year, 2020. So many small businesses have gone under. It's gonna take decades to actually rebuild the economy. I mean, prior to all this, I was expecting the economy to crash anyways, just because we have no industrial jobs and they all went to China. But I need to practice on it. China. So I don't. It's just so bad, and everyone's ignoring this. The normies are like, "Yeah, it's gonna go back to normie." No, it's not. And honestly, the pain that's coming, a lot of people deserve it. What happens when your society becomes lazy, stupid, and doesn't pay attention and doesn't care as long as, you know, they get their RVs, their cheap high fructose corn syrup, calories, and they could watch their big screen and play video games and do drugs. So the universe will punish you. Even if it was planned by like a small group of, like, you know, super evil people, evil villains. I mean, in a way, there is a reason why the dark side exists, why the light and the dark exists. The dark only creeps in if you let it. Well, here you go. The real S&P 500 total return versus valuations. Where's the key to this? The blue line. So current valuations and price suggests we are more aligned to here. Wow. Back to the 1930s. That's where we're valued at. And what happened after the 1930s? Great Depression. But this one's going to be an inflationary Great Depression. It's going to be way worse. And people are not self-reliant, self-sufficient. They don't farm. They don't know how to cook. They don't know how to do anything. I don't know. Everyone probably under the age of 30 could barely like change their tires on their cars if they get a flat. Let alone how to like actually patch a hole in the tire or change their oil. The weak will get weeded out. We'll see. The blue line, total returns. There's a huge disconnect right here. You see this gap? Huge gap. The S&P needs to return low 2000, according to this. Not further. Probably further. After 2020, I mean, so if we were to not sacrifice the currency, like literally, it would go back to like 1000. S&P. If we were to just have a deflationary depression. But that's not what they're going to do. So in real terms or nominal terms or whatever, I don't know. We'll see. It's not going to matter. What else do we have? So the golden opportunity, this talks about the Russell 2000 versus the 200-day moving average. Bottom of the double. Oh, here's the tech bubble. Okay, so the Russell's there. The Russell has pretty much peaked out according to historical prior peaks before major corrections. Here's gold versus real yields. So I think this is misleading because we do have yield curve control. And I do think metals are going to drop, and just like last time in March and in 2008, right, when the market corrected because of margin calls. So yes, this is signaling that we're going to get another leg up and gold's going to do another giant rally. I just think we're going to get a correction, and then it's going to... What I'm trying to say is you could buy in now and you'll be fine long term. But if you want to try to time this even better, I personally am waiting for the market to correct. Because you're going to get margin calls, and you're going to get like maybe a week or two, buying like a very short period of time to load up, to back up the truck and accumulate mining stocks and physical again. So yeah. All right, let's look at the charts. Today was green, even with the hack, for the most part. Give it a second to load. Go to my website, go to my Twitter, go to all those links below my video. Take advantage of that 40% off when you go to checkout. You have to click apply code above. It's in yellow. It's kind of hard to see. I should change that. It's not easy changing code. What else? If you did sign up, you have to go in your spam folder, because I sent out emails next day. You bought the report, and then you have to sign up the Patreon group and then verify, and then I'll let you into the private group. And then in the private group, there's a bunch of files folders of updates and more information, everything you need. And then there's spin-off chat groups for if you're interested in. This is not loading, it's taking forever. Close some windows. A second. Yeah, besides that, I think this week is going to be a bombshell week where a lot of things just come out. And I'm talking about like the election. So I think the market hasn't priced in. The market hasn't priced in anything. It's priced in perfection, and it's just extremely overextended. And honestly, the stimulus has to be running out. So does all of the unemployment benefits. And I mean, people are shopping. They don't have any extra cash to buy stocks. If anything, you would think they would sell. And if anything, if I was long equities as a swing trade, and I'm still holding somehow, I would take profits before the year's end to lock them in and pay for this year, not next year when capital gains might go up, depending on who wins, right? The dollar, it's holding on. It's at the 93 handle. Everyone's on Twitter, FinTwit is like, oh, the dollar is gonna dump. Depends who wins. Depends who wins. I talked about that in my last video. The 10-year yield, I mean, it hit 0.90. I think there's some more upside to it. And I'm telling you, if this thing goes above 1%, the market's definitely going to continue to sell off. I'm still holding my hedges, my shorts, for my entire portfolio if there's a huge correction. And, you know, if you have a margin account, everything's going to sell off and you don't want to get a margin call. First of all, not financial advice, consult your licensed financial advisor. I'm not a licensed financial advisor. I could be wrong. I'm not always right. These are my own opinions, and this is more about me ranting, giving you my opinion, economics, and learning how to trade. Again, nothing has really changed from what I said in my last video when it comes to the charts. Okay, nothing's changed. You just need patience. And we'll see if I'm right. And I could go through all of the charts again. But you know what? I'm just going to make another video tomorrow or the day after. Alright guys. Those mining stocks. I mean, it's literally playing out exactly as it did back in 2019 going into 2020. Same thing. So this seems to be a cycle. And I've shown you guys the charts, right? Bull. It's just giant bull flags. Very cyclical, very fractal. And look, last time I showed you guys this chart, I told you it was going to fall. And gold's falling, so is silver. Well, when there's a correction in the equities market, gold could do a sharp drop all the way down to like 1700, some or a little bit above it. And that'll be your back up the truck opportunity. But this is very cyclical. See, it's just waves, giant waves. Doesn't get any easier than this. You just need patience. And people who don't have patience are going to lose all their money. Warren Buffett's saying, money transfers from the impatient to the patient. And buying opportunity, and it's going to go straight up. And the next leg up, I could do some measurements, this and that. The move up is going to be huge. I'll do it in my next video. It'll probably be... Well, how big was the last move? For 2020. The move for 2020 was a 25% increase. Oh no, way more than that. So in 2020, gold went up from the March low. It went up around 44% from the March low, and from the beginning of 2020, the end of 2019, gold went up 44%. I think the next leg up might be an 80% to a 120% move in 2021. It would not surprise me. So that could take you, let's say it dips all the way down to like 1680 or something real quick for like a day. So you move up. Zoom out. I can't even zoom out that far. Let's take it to a weekly. And there's better charts of this. I'm just having fun right now. 60, 80. 80% move up from there. Put on the chart. Go to the monthly. All right. 40. All right, you know, I'm just gonna, I need to prepare for this. My next video, I'll do that. Smash some likes, share my videos. The way my channel grows, and I'll continue to do this. The next, I really believe the next 4 to 6 weeks is going to be, there's going to be something. It's going to be volatile. Something's going to trigger this market. It's beyond overextended. It's unreal. Matter of fact, in the long run, if the Fed wants the market to stay higher or make new highs in the long run, it would behoove them to actually let the market correct. And because that'll be the perfect excuse for them to do more QE. Also, they're having another like FOMC tomorrow, so I'm gonna listen to that. Although I can't stand listening to them anymore. They talk about all kinds of nonsense that has nothing to do with economics or anything, and it's because it's all about the Great Reset, which is what they're doing. Is, you know, they're literally making things up to be able to control people and suppress them, and so they accept this new global economy that they want to create and blah blah blah. But none of it's going to work. It's absolutely impossible. And I'm just going to digress. Till next time.